Welcome to another Coffee with Samso, where we speak with ASX companies, with their CEOs and managing directors about the story, and they shared with us what they're talking about. Today here we're at the UWA club here in Crawley in the University of WA. I've got Coughlan here from EMH, which is European Metals. We'll be talking about the project they have in Zinnwaldite in Czech Republic. Keith, far away, share with us what's happening there.
So yes, you're right. We've got a project, very big lithium resource at a place called Zinnwaldite in the Czech Republic. It's the largest hard rock lithium resource in Europe, about the fourth largest hard rock resource in the world. It's a historic tin mine, so there are some very helpful tin credits there. And obviously, you know, lithium is a very topical metal currently with what's happening in the world with electric vehicles and batteries. So it's, you know, we are getting a little focused on the project now. We're at our definitive feasibility study stage. That'll be concluded early next year, move straight to final investment decision. The project is fully funded through to that final investment decision, so we don't need any more funding at this point. And the aim is then that we'll go into production producing approximately 25,000 tonnes per annum of battery-grade lithium hydroxide as a minimum for the European market. And this is interesting because Europe is really the place in the world where the demand for lithium is growing the fastest, and there is no production in Europe. So it's a very interesting supply-demand equation that we're looking at there.
I mean, Zinnwaldite is interesting for me because it sits in that lithium space, but it's not spodumene, it's not brine. I think a lot of people out there, when they think of lithium, they think, or lithium industry, lithium project, they think of those two products. Maybe you can help share with us exactly what you guys are, because it's unique and it makes a difference when we, in our further discussions.
It does, it makes a significant difference. And you're right, particularly here in Western Australia, which is now the place that produces most of the world's lithium concentrate. We're obviously predisposed to knowing about spodumene concentrate. There is a third source of the clays, you know, so it's neither spodumene, brine or a clay. So the host rock is called Zinnwaldite. It's a mica. It's similar to something like lepidolite, you know, which is another lithium-bearing mica. And it was an area that wasn't really focused on traditionally in lithium production. I think the key reason for that is that lithium simply occurs at lower grades in micas than it does in spodumene. And that caused people to discount it immediately. However, as we can discuss, there are a number of characteristics of micas that actually means you can extract that lithium for lower cost than you can from spodumene. I don't believe it's going to replace spodumene in any way, but you know, I think the world is going to require all of the available lithium sources that it can get its hands on going forward.
Yeah, I think I've read a document recently. It's like the nickel industry. You got nickel sulfides. Anyone loves chasing nickel sulfide, but the lithium, the EV evolution, you want to call that, actually still once needs the saprolites or the nickel laterites. And so you can't go one without the other, is what you're saying. And one of the key things, the reason why I want to bring that topic out is because, as you touched on, the cost is actually lower dealing with mica. However, the historical understanding is that, oh, you've got micas, it's really hard to get it out, there's chemistry issues and stuff. But I've learned recently that is not the case, and you know, my thinking back then was, well, it must be 4 years ago, right? So maybe you can just update us on that part itself.
Certainly. So a lot's to do with the properties of the host rock. You know, spodumene is a very hard rock. It's refractory. You need to calcine it, roast it to a very high temperature. It's then cooled. Traditionally, a lot of sulfuric acid is added, and then it's roasted again to a mid-temperature, about 850 degrees. So you have quite a lot of cost in those three steps, production cost. You know, higher temperature roast obviously consumes more energy, makes it more expensive. It also emits a lot more CO2, which is becoming a more important factor these days with the focus on emissions and ESG credentials. Zinnwaldite, it's a single stage, mid-temperature roast, 850 degrees, which is roughly equivalent of the spodumene second stage roast. So there's a lot of energy saving to begin with. The reagents are cheap and benign, sodium sulfate, gypsum, limestone, these sorts of things, versus the high acid consumption traditionally in the spodumene route. But we also get greater recoveries from the ore. The ore body itself it's a very large, continuously mineralised ore body. We'll be mining via a bulk underground operation. So you're not chasing narrow veins, you're not having to be very selective in your mining. Plus, through the process route itself, we also get greater recoveries. We put out an announcement a few weeks ago now, that we're touching on 92-93% recoveries, which is excellent and significantly higher than your typical spodumene project. So all of those things help us in our cost profile. We produced a PFS 2 years ago now that showed we could produce battery-grade lithium hydroxide net of our tin credits at less than $3,500 a tonne US. So that puts the project very much in the bottom half of the global cost curve. Now, when you look at what's happened with the lithium price recently, this year in particular, we're looking at prices around $15,000-$16,000 a tonne currently for battery-grade hydroxide, and with very strong potential to rise further. You can see there's significant, margins on that production.
Sinovac being where it is, obviously one of the key issues with any project around the world is where you are relative to your market, right? I looked at your market cap, sub 300 mil.
It's about 260 million Aussie.
And you got a product that's sitting in, you could almost say, next door to all the major car manufacturers in Europe. And you mentioned earlier that you're the only one that's in Europe. So surely that's going to be a very, very positive point for your feasibility studies.
The location is very important for a few reasons. We're not the only lithium project in Europe, obviously. But it's important from a number of different points of view. Firstly, the EU has committed significant resources to building a battery industry, a local battery industry. They're fully committed to an electric vehicle future, and they're also committed to developing Europe's own raw materials wherever that's possible. There was a statement last year by the EU Commissioner about wanting to be 80% lithium self-sufficient by 2025, which isn't possible. There's not enough lithium projects in the development phase to meet that target. But it's important from the point of view, it's an aspirational statement. So the EU committed some 550 billion euros to green energy stimulus package in about May of last year, and which obviously includes EVs and a battery industry. And they're not going to commit that sort of money and be reliant on a supply chain from other parts of the world, particularly from China. So it's very important for them to develop their own raw materials, and that's an added plus for us. So that's one factor, the geopolitical side of things. Secondly, is just a cost factor. So currently getting lithium into Europe is expensive. If you think about the logistics of transporting spodumene concentrate from here in Western Australia to Europe, that's a big ask to put it on a ship. Even if you were to put raw spodumene concentrate on a ship and ship it all the way to Europe for processing in Europe, which is currently not possible because there's no conversion facilities in Europe, that's a big logistical exercise. It's a big cost exercise. You're shipping material that's 94% waste. So it also doesn't help with your CO2 footprint, shipping rock halfway around the world or 2/3 of the way around the world. So it's important from that perspective as well. Then if you were to ship that con to China, which is the current route, turn it into hydroxide or carbonate in China and then move it to Europe, well, you're moving a higher value product, but you've still got to ship it to China. You've got to convert it into battery grade chemical in China. Primarily that's in a coal-fired furnace, which doesn't tick too many boxes from an emissions perspective as well. And all of these factors are becoming very, very important. So when the European car manufacturers are assessed on their emissions profile for an electric vehicle put together in Europe, they will be assessed on the entire supply chain. So if they can buy their lithium locally within Europe, with the ESG profile of that material versus something that's shipped halfway around the world or potentially calcined in a coal-fired station, it's going to have a benefit to them from their own emissions perspective, and that's becoming increasingly important.
I think the market going forward, you're starting to see in the rare earth sector where a bit more rumblings are happening, because before, if you spoke rare earths, you said, oh well, it's cornered, market's cornered. But now there are a bit more rumblings of things happening outside, because whether for people needing surety of source closer to home, sovereign issues, all these kind of things building, and then there's that big elephant walking around now, the ESG. I think that's ESG is no longer a whisper. I think it's mainstream.
Yeah.
And everything is ESG now. And I speak of the time when I was talking about tin, and there was an article from Wood Mackenzie saying that there's actually a lot of tin around, but 90% of that sits in that ESG issue, right?
Yes. Yeah.
And if that was the case, two things can happen. Tin price is going to go up because you got 90% less volume, or a portion of that's going to spend a lot of money trying to get it ESG corrected, complied. Well, that's going to push the tin price going up as well, right?
Yeah.
So,
and what have we seen this year? Tin is one of the strongest performers on the LME.
Yeah.
So our tin credits, that's fantastic for our project, seeing the tin price as strong as it is.
Yeah, that's where I was going to lead to with what you guys got. You got low cost production on the lithium side. Then you got the tin credits, which when I looked at your project, you're almost like a tin and lithium project, right? Like a copper gold or gold copper, that kind of jazz. But that would significantly add to your cash flow on your feasibility, yeah?
So the way that we demonstrated that in the preliminary feasibility study was showing a gross and a net cost of production. So the gross cost of production of lithium hydroxide was a little under $5,000 a tonne. The net was a little under $3,500 a tonne. So the tin credits, and at that stage that was with tin at $22,500 versus it's $32,000 or $33,000 now. The difference back then was $1,500 a tonne, which obviously makes a big difference on 25,000 tonnes of lithium hydroxide.
Yeah, I think look, at the end of the day, when we're at the infancy part of electric vehicles, it could be electric vehicles on all scales, and I think when we get to that next mature, more mature stage, it all is going to be how far you are from your actual source, and which leads to what we sort of talked about before, was you're literally on the other side of your border. You've got all these car manufacturers sitting there waiting. Why would they go and explore elsewhere? Rather invest in something that's in their neighbour, that they know they can just go literally across the border to pick something up, right?
Yeah. Well, we think that's exactly what is going to happen, and we don't even have to actually go across the border. The car industry, the automotive industry within the Czech Republic is a very, very important industry. It accounts for a little over 10% of GDP. There's a lot of cars made in the Czech Republic. The Skoda is the historic Czech car, which is now owned by Volkswagen, but the Czechs still see it very much as the Czech car. And the Czech Prime Minister himself has stated he'd like to see Czech lithium in Czech cars. But if you drew a circle around the project, 500-kilometre radius, there's about 6 million vehicles made every year. And obviously every year, more and more of those vehicles are being made electric. So yeah, we don't think we'll be moving end product anything further than a couple of 100 kilometres from the project.
I think a lot of Australian investors or Australian thinking about the EV is on par with what's actually happening in Europe, because I know for a fact my in-laws have just bought a new Tesla, and they're telling me it's cheaper to maintain that car than they're all, I believe it was a Honda or something. I'm not trying to throw names of car manufacturers, but it was cheaper to maintain that on the road than your conventional hydrocarbon car. And there's lots of incentives by the government to get you to move to electric, right?
Correct.
So the speed and the volume in Europe is, I would say, significant compared to even here.
Well, it is significant to here, and I think, you know, Australia, because of the demographic, because of the very large size, low population, any infrastructure rollout is expensive on a per capita basis, you know. But a place like Western Europe, one of the most densely populated areas in the world, you know, on a per capita basis, infrastructure rollout is relatively cheap. So when you look at the commitment from the EU and then various EU governments, Germany in particular, the commitment to spending money on building recharging points, recharging stations, is significant. The commitment to providing recharging car bays, public car bays, where you can just simply plug in. In fact, I saw one out here in the car park when I arrived today with a Tesla plugged in. And you also don't have this concept of range anxiety in a place like Western Europe. You know, everything is quite close. You know, whereas here in Australia, obviously, you think you want to drive your friend's Tesla from here up to Broome. You know, that's a big distance.
big problem.
You want to make sure you can plug in along the way. So, you know, there are a number of factors why the take-up of EVs, particularly in Europe, is going to be so strong. Incentives, as you mentioned, big incentives. I understand that you can buy a Nissan Leaf in Germany now if you're on a certain income bracket, and it'll cost you between 1,000 and 2,000 euros. So, you know, that it becomes compelling. And then in terms of what you're talking about, the overall running costs, people throw around different numbers about whether we are yet at life of vehicle parity or we're not quite there. But as more and more money is spent on EVs and on battery technology and on lithium-ion batteries, the cost of the batteries per gigawatt comes down, and it brings all those costs down. They get more efficient, you know, greater distances, quicker charging times, etc. But it does bring that price parity much closer to reality.
I think that's one of the things. I mean, went through the announcements and looked at where the project is. I mean, from an infrastructure to build, you've got power, everything's sort of nearby, as opposed to a project that's sort of, you know, outback Australia or, you know, somewhere. It's hard to imagine that you could be outbid in terms of price from a competitor that way.
That's true. Look, you know, it is a historic mining area. All of the infrastructure is there. You know, we don't have any problems with road, rail, transport, workforce, water, any of these things, power, are all there. And as I say, I think we'll be shipping end product or railing or trucking end product to customers within a couple of 100 kilometres of the project. So yeah, I mean, it's going to be low cost. It's going to remain low cost.
I mean, I was looking at Europe for projects probably 4 years, maybe even 5 years ago. One of the attractions was the fact that the countries or wherever you may be would always be looking to try and keep you there because you're generating income for the nation, right?
Yeah.
And in some ways, when I look at where you guys are, it's, you know, apart from, you know, technical issues, you know, you can't get that up and down, which you will sort that out in your feasibilities and things like that. And from what I can see, you know, the resource is there. So
yeah.
But, you know, one of the things was, you know, the technical side might fail, but surely from the economic point of view, it would be almost a no-brainer that this would take off, or any project would take off. Is that what you're hearing from the likes of the European market, that they are seeking this kind of stuff?
Yeah, so one of the things we did last year, we entered into a collaborative agreement with one of the European Union bodies called the European Institute of Innovation and Technology, who are one of the principal facilitators of the European Battery Alliance. So if you like, you know, the EU made available significant funding for battery industry, EVs, green energy. And the EIT is one of the entities that sits as a go-between the EU and companies like ours in order to try and help facilitate things at a business level. So we have regular contact with these guys. They're very supportive. They're helping us in many ways, but they're helping us apply for grants. There's significant grants available in the EU for these sorts of projects. We believe we qualify for a number of EU-based grants, and these grants are significant. But also, there'll be soft debt available, I believe, through things like export credit, through potentially European Investment Bank, European Bank of Regional Development, these sorts of people. And, the EU is keen to see projects like ours come into production for all the reasons we've already stated. You mentioned earlier also about, the supply chains. So, COVID focused people's attention back on local supply chains and clearly demonstrated the dangers of global supply chains and the dangers of relying on material coming from the other side of the world. I mean, we're even still seeing now delays in most global projects that are logistical delays brought about by COVID-related issues still now. And that focus on the local supply chain is only emphasised by the economic thing, raw material security, and as we've said, more and more importantly, ESG and emissions issues. So, from that point of view, being close to your end users, it ticks a lot of boxes. If you look at the entire supply chain behind an electric vehicle, the only element of that you can't move is the mine.
I mean, look, in terms of, how we see our world or our industrial revolution has happened, it moves in chunks, right? And then now I think we're seeing, as you just pointed out, that COVID has put it plainly. I used to say that COVID has effectively forced everyone on the internet when the internet's been trying to tell you to get on the internet all these years, right? And suddenly it's okay to have a Zoom call with this person, whereas before you people would say, oh mate, you need to go and see him.
Absolutely, it has to be face to face.
Has to be face. Now it's like some of these people don't even want to leave the office. they just want a Zoom call, which I think translates into industries as well. Is that suddenly people say, hey, I've got this mine here. Our people can use it. We can employ our people, or on the other sense, the car manufacturers saying, hey, I don't have to worry about that length of distance of getting my source, right?
Exactly.
Yeah.
So if a car manufacturer or a cathode manufacturer in Europe want to visit the project to do their full due diligence, it's a very easy matter compared to trying to travel halfway around the world and go through various stages of quarantine to get there. It all helps.
Yeah. So for investors of such, what's the news flow going forward? 12, 18 months, whatever the schedule is.
So I like to talk about the news flow in two different parts. So we're in a definitive feasibility study, which is typically a reasonably boring time for a mining project as you go through ticking those boxes. Yep. But we'll have a number of pieces of news come through from the DFS, and we have done that already. We announced some test work a few weeks ago, the lock cycle test work, all of which has been positive. So those sorts of things will continue to be announced to the market as they go. Where I think we'll see more interesting pieces of news are in the macro, in the corporate side. And lithium space is a fast-moving space at the moment. There's significant activity, there's significant M&A activity. We're seeing strong movement in the metal price, and it's still a slightly opaque market, the lithium market. It's not particularly transparent. We're probably sitting, as I said earlier, around $15,000 or $16,000 a tonne today for battery-grade hydroxide in Europe. I read various articles within the last week saying that people can see 18,000 to 20,000 by the end of the year. I can see that. I've seen some commentators say they believe the lithium market's already in deficit, and others saying it'll go into deficit early next year. In any regard, I think we'll see better prices. I think 18,000 or 20,000 might be a spike, and we might see it settle back a little, but it could settle back quite a bit and still be very economically viable for us. But for us, the key things for us now in order to get through to production, obviously the DFS, but the DFS will lead to significant discussions on financing and significant discussions on offtake. And I think the market is keen to see us sign an offtake agreement. I'm keen to do that, but we are in a seller's market for lithium currently, and I think that the timing of those offtake agreements will be important, and obviously the terms you want. I would rather ink a bankable offtake agreement rather than a something that's a little bit nebulous, like a non-binding agreement of some description.
I mean, the thing that sort of sticks out to me, as you were telling me about, what's news flow and what's in store, you're, without using crystal ball, you're almost at the point where you are going to, it's foregone conclusion that you're going to end up being a producer and supplier, etc., etc.
I believe so, yeah.
In some degree. Then I look at your market cap, you're 260, 70
yeah,
million.
260 right? Aussie, I suppose,
and
today.
And in my mind, I'm talking about, hang on, there are a lot of companies that's got a B behind it, and they're not anywhere near this stage. It must frustrates the crap out of you.
Yeah, I think that's a good way of putting it. But I have the confidence that it'll unfold, Noel. I have the confidence that we'll get there. I do believe this project's going to go into production, that it'll get funded, and that we'll have the right sort of people, right sort of partners around the project, household names as offtake partners. We are, as we've announced to the market, we are going to a full NASDAQ ADR program within probably this month, hopefully within the next couple of weeks. We've seen a lot of money come out of out of the US for these sort of projects in recent times. As we've also flagged, we'll look at the possibility of a phase 2 of production, increasing production in the project, up from the 25,000 tonnes we're currently talking about, and I believe that that's feasible, and I clearly believe that demand will be there to produce more. So there are a number of catalysts that we're working on. If you look at the PFS from 2 years ago, the MPV post-tax was 1.1 billion US. So our share of that's in Aussie dollar terms about 720 million versus our market cap, as you say, of 260 odd. So yeah, I think there's some room to grow, and it's our job to find the catalysts to help that.
Oh, I think the obvious answer for me, from a sort of investor sitting back thinking where things are at, 270 million is not probably where I think if we put money in it, I don't know, $1.60 or whatever you are at now. So much more room to grow. I guess the big answer, the big question, I guess, from if you look at different products, spodumene, brine, whatever, and I know the answer. Is that it's already proven. But what do you say to those guys that says, well, chemistry is your biggest problem? Is that sorted, or is that almost gone? You've gone past it so far that it's just
look, internally we don't consider it an issue. We've been working with this ore for 7 years now, 7.5 years. We've used 5 different process routes to get to where we are today, to optimise our process. We have a PFS signed off by Hatch on the process that it works. We're going through a DFS now that'll be signed off by the German company engineering firm SMS, to further prove that. We've produced battery-grade lithium carbonate and battery-grade lithium hydroxide already, both of which meet all the published specifications of all end users. Now, both of those samples were small quantity, so obviously as part of the DFS, we bring it up to scale and produce more. And in doing that, we'll be able to actually ship samples to those potential end users. So, yes, certainly I think the overall view is that this remains a risk. The process, to us it doesn't, but obviously that's what the DFS is all about, is demonstrating that.
Okay, fantastic. Look, guys, it's a different project. It's a different style. I like it because it's low cost, and everyone thinks lithium as we mentioned, spodumene or brine, but everyone missed this sector, and I think it's critical. And EMH, I have been following it and watching it from afar, and it's still very in that position where you think this thing should be worth a lot more. It's already almost mining. It's one of those mining projects that is going to probably happen. So look, I do your own research, as I always say, and look, reach out to Keith. I'm sure Keith will have lots and lots of answers for you guys. But Keith, thank you for your time. I've been chasing you guys for a while, as you probably know, and finally caught you guys. Thank you for sharing, and I hope we continue to follow the story.
Thanks, Noel. Appreciate it. Appreciate your time. Look forward to coming back again sometime soon when we've got some further news for you.
Great. Thanks.
All the best.